I want to share a trade that I made today. Now, the biggest thing that I've learned in trading is risk management is a bigger piece than anything else. Okay, so yesterday I talked about this Home Depot as a stock I was watching because I was outside it's outside the AI bubble. And so I'm looking for things outside of that sector using my AI agent. Home Depot was one that came up because it had a futures PE earning that was a good price. That's why I was looking at it. Now, I got my notes here. These are my words coming at you, but I want to be very specific. This video is not sitting here to tell you, I wish he would have told me earlier. I wish he would have showed me when he's making. I'm using this as a learning experience on how to manage trades. And I used all of my things and my philosophies that I've learned and I'm sharing with you today. Take notes. Now, a lot of money has been chasing the AI names, the semiconductors, okay, the high growth techs. Meanwhile, Home Depot was trading near its 52-week low. So, normally, I'd stay away from trades that have to do with earnings. I don't like trading on earnings. This is personal because I have seen a lot of these AI stocks that when the earnings come out, it doesn't do anything. It kind of peters out because it was already baked into the price. When things are elevated and high and earnings comes out, it's already priced in is what I've learned. When things are low at the 52-week low and earnings come out, if they don't meet expectations, it's going to go lower. If they do meet expectations, there might be an opportunity to get in. That's what I did. Okay. So listen, this wasn't some kind of reckless gamble. Just because this stock was low. It's funny because I was watching CNBC. I used to love Kramer. Love that guy, dude. He's so charismatic and stuff. But there's an indicator that whatever he says go the other way. And it's funny because this morning he was saying that stock's a dog. So it caught my attention. That's on a side note. Back on task. Okay, the setup, it was pretty specific because Home Depot's already beaten down. Okay, if earnings simply met expectations, that could be enough to bring some buyers back in and create volume to push this thing up. The retail investors don't usually know anything about the earnings until it's posted day of, and that's the way I was thinking. One of my rules is do not make a trade with more than 10% of your allocated funds in your portfolio, whatever portfolio it is. This trade went a little bit above that for me. So I was above my 10% threshold, so I really had to take a defensive approach on this trade. So buying 100 shares of Home Depot would require a lot more capital. Decision that I want to do on this trade was a poor man's covered call. Okay, because you can buy that LEAP option. It's a long-term in the money. If you're going for this kind of a poor man's cover call, you have to purchase a call in the money. Take a note of that. You have to have that intrinsic value, so if something gets goofy, you're not going to get totally obliterated. Buying call options is risky because you don't own the stock. You're buying a lottery ticket. If you're out of the money, my plan was to go deeper in the money with a LEAP. Like I said, it has intrinsic value. Now, this is very different. It's a very different risk profile than just buying a short-term call option. Now, and I know what I'm talking about. I've lost money buying call options in the past when I was a rookie trader. The reason I chose to deepen the money is because it behaves more like the underlying stock than the short-term speculative call. I like a delta between 70 to 80. That means every dollar tick on the stock, 70 cents. If you got the delta of 70, that option will move 70 cents. It's a way bigger percentage than just holding the share of the stock and it moving $1. Okay? I could take profit quickly if the trade worked out right away. That was also in the back of my head. So, if I move back to cash instead of forcing the trade into a bigger long hold, that satisfies my objective right now to holding cash because we're going to be seeing better prices. Again, I could hold on to this LEAP and then, sell calls against it like $200 to $300 every 30 days was my plan initially. If I thought that stock can kind of maintain its price range. To collect that premium, I would have had to keep this position open for a longer period of time. Okay, that means more market risk, more headline risk, because the headlines for Home Depot aren't great right now because of the declining real estate market. Okay, the earnings reaction risk, if they happen to not do well on the next earnings report, that could crush this thing. Okay, more exposure to the trade. It was already slightly above my 10% comfort. So these are all the things I'm thinking about that I'm sharing with you today. Here's what the chart talked about. This is what it looks like. I really rely on technical analysis. I don't care what other people say or what. TA doesn't lie. The charts don't lie. There's people that talk smack about that, but I look at what the charts say. And so I went back to what was this is TradingView. If you're interested, this is the best charting program that's out there. I got a link below if you're interested. It's free to sign up. Now back here in 2021, March 21 is my long-term trend line. I had a couple touch points. I like having more than 3 touch points. We've got about, this didn't quite touch 2, 3, and it ran through over at the end here. Okay, now I'm going to zoom in and show you what I was looking at. These are daily candles. This is what the setup was doing. The red lines are my downward trend. We've been in a steep downward trend since September 25 on this company. The little sliver was right here yesterday, and we were sitting right on that support level. Today was the earnings report that came out. And so, I was up at 6 o'clock searching around to see if there's any pre-news about earnings, and sure enough, I used my agent who found before that 6:30 bell hit that the earnings hit expectations. They beat it by 0.7%. Surprise. So when I saw that, I put in my order to buy. Look what happened, people. It shot down. It was scary. This is one of the first times that I put in my sell order. Okay, right around this level. Lo and behold, I don't know how it happened, but I got filled lower than what my limit order was for. That was a blessing in disguise. That's another thing that I added to my mind, was that I got blessed to have gotten filled lower than where I put in this order. A little bit too high. I was getting greedy for like a 20% return. And I'm like, dude, what am I, stupid? I mean, come on, a 20% return in 2 hours, that doesn't happen very often. So I got more realistic and brought it down, and then sure enough, it got filled for a 14.5% profit on this trade. I've been a teacher my whole life, since I was a young man, as a high school teacher, and I didn't like the system. Sorry, I'm digressing a little bit, but if I could teach something, I was teaching a math class. I didn't care about math sometimes, basic math. If I could teach something that was more applicable to life and how to become a better person, that was my objective the whole time in public education. And that's kind of what I'm trying to do with you here today, giving you real examples and my thought process going through this trade and how it worked out. So with that said, thanks for sharing, everybody. Thanks for checking in. Hop Sauce signing off. Appreciate your time.